Hello everyone. In today's Finance in 3 Minute series, I'll explain how does an inflationary pressure impact the stock market. So, what is inflationary pressure? Inflationary pressure is when inflation affects both the supply and demand side of the economy and thus a general price rise is noted. Such situation affects each and every part of the economy. Inflationary pressure forces economy to adjust its demand and supply. Equity market relation with inflation. Speculation about the future pricing of product and services fuels a volatile market environment, which in turn contributes to rising inflation rate. Many people worry that businesses' profit will go down when the costs go up. Consequently, some shareholders may opt to sell, potentially causing a decline in stock market price. However, investors who are confident in the company's ability to turn a profit in the future may purchase these shares, adding to the market's volatility. The impact of inflation rates shifts on value stocks is significant. Value stocks tend to have a market value that rises at a proportionate rate to inflation. So, value stocks do better when the inflation rates rise. Contrarily, growth stocks generate a small amount of cash. Consequently, they are inversely related to inflation. When inflation rates rise, the market value of these equities fall. Finally, dividend stocks might see a decline in value as a result of increase in inflation. The simple reason is that dividends may not grow at the same rate as inflation, making the stock less appealing to buyers as prices rise. What must investors do? Contrary to popular belief, inflation is not the issue here. Actually, a moderate increase in the inflation rates is an indicative of a flourishing economy. If you go back over the time, you'll notice that increase in inflation typically coincides with the rise in GDP. Remember that if inflation rates were excessively high, people's ability to buy things would decrease significantly, which can have a negative impact on the economy. But if the inflation rates are kept too low, economic expansion may be compromised. Investors need to look into inflation rates from the previous years to see if the current spike is temporary or long term. Stocks may do well in the rising inflation environment, which is beneficial for the businesses and the economy. So, next time you come across news about inflation and its impact on the economy, be sure to invest in the stock market and choose value and growth companies for better returns. Thank you for watching.